What's up guys, Jake here. In today's video, we're going to do another update to my brokerage account challenge. In the event you haven't seen any of my prior videos, I will include the playlist down below so you can catch up. But it is me versus a total stock market index fund. I started this challenge on January 1st, and this is current as of April 7th. This is trading day 65 of 252. And the S&P 500 broke 4,000. I've been predicting this for probably since, early March. There's been a really nice uptrend the last month. We punched through 4,000 on Monday because of the good jobs report from last Friday. The economy is roaring. There's potentially another $2 trillion infrastructure bill getting passed by Congress this summer. So it's getting pretty crazy. And with my total stock market index fund, I do believe the first quarterly dividend was deposited, so that's reflecting in the balance now. This index fund started with $25. It's now up 10.3%. That's pretty good for the year. And I am up 57.4%. So I started at 25,000. You do the math, I'm up 14,411. And this is a screenshot from my Schwab mobile device, and this is pretty crazy. This is better than I thought it would be. The goal at the beginning of the year was just to beat the index fund. I wanted to try this challenge as an experiment. Could I outperform a simple low-cost index fund by actively trading, swing trading, and trading options? And I didn't start for the challenge selling cash-secured puts until February. And then in March, there was a huge dip by a bunch of consumer discretionary stocks like Costco, Target, Walmart, Dollar General. And that's when I decided to pull the trigger and buy call contracts. And I've been just riding that back up, basically. I feel like I've also picked a good subsector of the industrials with defense stocks, and that's also catapulting me up. So I have to definitely keep researching and figure out what's next. What is the next sector potentially this month that I want to be buying call contracts on? These are my positions as of my last update video on March 31st. You can pause the video if you want to do any kind of comparisons. And it's changed to this. These are my positions current as of April 7th. Something I want to point out is I'm holding a lot of cash right now. I've got 7,400, which is a large amount for me. I'm not on margin, so that's good. And all in all, between all of my call contracts, I now have 14 positions. And I sold 2 call contracts, mostly to simplify my positions. I bought to open AFLAC and Synchrony last month, and I sold to close them for small profits, mostly because I just think I'm in too many positions. I don't want to be in 14. So these were smaller positions because the share price is just lower. I don't have anything against AFLAC or Synchrony. We can check out their charts. With AFLAC, it's a nice uptrend. It has been trading sideways for almost a month. It basically hasn't gone up, but I still think the fundamentals are good. The technicals look good. I just wanted to simplify, once again, my positions. So I also sold AFLAC and Synchrony. Same thing with Synchrony. It basically has been trading sideways for almost a month. Is the uptrend halted? Probably not. Whenever there's an inflation scare, all the financials shoot up 1 or 2%. So if you're a buy and hold investor, these are still good companies, but once again, I picked up 2 positions, so I dropped 2 positions. Additionally, I sold my stock in Apple. The reason why is because I have a call contract on Apple, so I don't feel the need to also hold the stock. I am capturing the uptrend currently happening. So with my cost basis, I was dollar cost averaging as it was dropping. I kept buying more as it was going down. It's finally gone back up to my cost basis, so I'm happy just to get out without it being negative. So my profit is only $16. And I don't know what the plan is or what Apple is doing. This drop from 142 down to 118 was unexpected. And as I said, I think when it got to 130, I bought a little bit, and then it got down to 120, and I bought a little bit more, and it just kept going down. So Apple is the world's largest company by market cap, so it's really hard for this thing to shoot up or to get moving. With a market cap valuation of $2 trillion, I see it getting back up to 130 and then just trading sideways for a while, potentially through this summer, and then maybe, on some car news or something, it'll start uptrending again. Still a fantastic stock to hold long term, but I don't see much upside for Apple beyond 130 in the near future. Here's my Excel spreadsheet with all my sales since January 1st. So these are all the stock swing trades, and then these are all of my option plays. And what I want to focus on in this video is FAANG, because I actually do think it's back. And FAANG ran up huge from the March low of last year when all the stocks fell off a cliff during the pandemic. And I forget, it was Jim Cramer who coined this expression FAANG, but Microsoft should really be part of the group. And I'm questionable if Netflix should be there. So when you look at Netflix stock chart, there's two ways to look at this. It's a well-consolidated stock that's been trading sideways around 525 since July of last year. So maybe it's due for a breakout. However, what is Netflix's future growth potential? Is it going to be as extreme as the last 10 years? I don't think so. I think with all these other streaming services, HBO Max, Disney Plus, Viacom, the growth potential for Netflix, at least in North America, isn't there anymore. So when their growth capability declines, it doesn't matter if they're still, increasing their revenue and profits. Because their growth potential is declining, it's not as attractive for investors comparable to maybe the other FAANG stocks. So I'm not interested in Netflix right now. Could be wrong, could be a fantastic play, but I don't want to get involved in this stock when this is what the chart has looked like the last year or so. With Google and Amazon, both great companies. However, their share prices are ridiculous. They really need to do a 22-to-1 and a 32-to-1 stock split to make the option contracts for Google and Amazon more affordable and more realistic. I know I could do a credit spread or a debit spread, but I don't want to. So I'm just going to ignore Google and Amazon, but they're also looking to uptrend. With Microsoft, I know they've had some good news recently. I think they're acquiring Discord, which kind of annoys me that once a new app comes out, one of the big tech giants just immediately acquires it rather than it becoming its own thing. Microsoft has already been sort of in a breakout. It's hitting its all-time high now at 250. It shot up huge in January, February. There's definitely still upside here, but I'm not really interested in Microsoft right now. I could be wrong, it could be a great play, but I'm going to choose to ignore it. So that leaves us with Apple and Facebook. And I already mentioned Apple's share price. I'm going to see what happens when it gets to 130. If it trades sideways for a couple weeks, then I'll get rid of the call contract because I think its uptrend will halt. So the stock that I'm most interested in, that I think has the biggest upside in the near future, is Facebook. And with Facebook, there's one other company that I want to include in FAANG if I can, and that is Adobe. And I don't think Adobe gets enough recognition for how much tremendous growth they've experienced the last decade. It's pretty unprecedented along with the other FAANG stocks. And I think I pay $32 a month for my Adobe Creative Suite membership. They easily could make that $50 and I would still be paying it. So let's look at the stock price movement for Facebook first, because this is the perfect indicator for a breakout. So the March low for the pandemic occurred just past here. Facebook and the other tech stocks shot up huge until basically what is that, Labor Day, September, or first week in September or something. And Facebook hit a brick wall and then has been trading sideways since the end of August last year. So that's almost 9 months where this stock has been resting, where the share price got ahead of the company's fundamentals, investors weren't willing to pay more for the stock, and it's just been drifting, like I said, for 9 months. And this is perfect. This is what you want to see. A company that's growing still, good fundamentals, and the share price has been resting for at least 6 months or greater. and something clicked here at mid-March, and Facebook is now on this staircase going up. It broke through 300, which was like an indicator for me that it's time to get in, and it's now at 313. And I think this will keep going up and probably hit a nice round number, probably 350. That's just how people think. So this is going to definitely keep going up through the month of April, maybe into May, and then eventually it'll hit a resistance dollar amount in which people don't want to pay higher, and it'll start trading sideways again. Let's go on macro trends, and I'll show you Facebook's fundamentals. Between Google and Facebook, they suck up something crazy like 80% of all advertising dollars. And Facebook's revenue growth is pretty sick. You can go ahead and see what they've been doing. I mean, I guess the fourth quarter of last year was a monster quarter. We don't have the data yet for the first quarter of this year. And net income, surprise, surprise, they're very profitable. Facebook, of course, has WhatsApp and Instagram and Oculus and probably a bunch of other things that they've acquired over the decade. So this is shares outstanding. Ideally, you want to see this going down. Facebook doesn't really seem to be doing any stock buybacks, but they're not issuing new stock. We don't want them to do that. Don't dilute the current value of my shares, thank you. Let's go to price ratios and see where Facebook has been valued in the past. When we look at the P to E ratio, it's been as high as 32, 28. It's currently 30, so in this market, I think that's actually a good valuation. Price to free cash flow, this is important, and Facebook in the past has been valued around 36, 28, 31. It's currently 37, which is high, but it's lower than 39 where it was last summer when it started trading sideways. So I'm happy to buy a call contract on Facebook and ride this up to potentially 330, 350. The call contract I bought expires July 16th. The cost was $2,100. The strike price is $305, so I'm already in the money from where I bought it. And you add the cost of the contract to the strike price, and you get the break-even price, $321. It's already at $313. I think it's going to hit $321 next week. The next stock to look at is Adobe, and this is the exact same story as Facebook. I love it. Look at this beautiful uptrend that Adobe experienced from the pandemic March low of last year. This thing just jagged steps, went straight up basically until Labor Day weekend, the same weekend that all the other tech stocks stopped growing. And it's been consolidating sideways for 9 months around this 475 average. And it hasn't been able to break through 500. It's bounced off 500 3 times in the last 9 months. And it hasn't broken it yet. However, I thought with Facebook uptrending and the other FAANG stocks doing pretty well, that Adobe's fundamentals make it the most attractive right now. I don't know why there was this huge sell-off where it got as low as 420. I wish I had bought it, mid-March, early March, and got in this low. But it's currently, in my opinion, in a breakout. You can see 493. If Adobe punches through 500, it's off to the races. This could go to at least 550, probably closer to 600, 650 before it stops. Adobe's fundamentals are sick, as you would imagine. Look at this revenue growth quarter after quarter. I imagine as more and more people are working at home, they're having to sign up for Adobe subscription to get Adobe Illustrator and Adobe Photoshop and Lightroom. So that is just crazy. They did 3.9 billion in revenue in the fourth quarter of last year. Wow. Okay, let's look at net income. I'm not ready to be shocked here. Whoa! No, just kidding. I was shocked. That is huge profitability. Shares outstanding, is it potentially going down? And yes, it is. Adobe is still buying back shares, so this is fantastic, actually. Let's look at the price ratios, P to E. And look at this. This is what we want to see. In the past, Adobe has been valued at around 53, 48, 57, and it's currently only 42. So Adobe looks even better compared to where they've been valued in the past than Facebook. Let's look at price to free cash flow. This is probably also going to be a good number. And I guess it's been valued in the mid-30s in the past. However, you can see last summer it shot up to 50. And that's when Adobe's share price halted and it started trading sideways for 9 months. It got too rich and you had to wait for their revenue and sales to catch up to their share price. So currently the price to free cash flow as of February was at 38 and now it's at 41. It's going back up, but I still feel like for this market, this is a good valuation. So I bought a call contract on Adobe and the cost was very rich, $2,920. This might be the most expensive call contract I've bought. Strike price of $490, so the contract is already in the money. My break-even price is $519.20, and like I said, minimum this has to get back to $550, but I think it's going to go even higher. So these are my 14 call contracts. This is still my game plan with these 4. Wait till it gets to this price amount, and then if it keeps going up, don't sell it. But if it starts trading sideways for a week or two, then get rid of it. And with all of these, once again, I think they're in uptrends. I'm going to wait until it's obvious that the trend has halted or I get to close to 1 month from the contracts expiring. I don't want to hold it in the last month because of theta decay. So that's my game plan going forward. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.